rally, if anything. But one of those plays, and then we made this play on Friday, CNK and AMC. These are the movie theaters. There was like a theater law that got repealed that pretty much allowed production companies to purchase theaters. So this could change the landscape of who could buy and benefit off of these companies. But we did two different plays. One of them was shares. AMC is a cheaper stock. It was down a lot. I think they still pay the dividend. I don't know. I'm pretty sure they suspended it, but grabbed 300 shares at $495, $1,500. It was cheap. The option premium was shooting up when the news came out on Friday. It made more sense to go with the shares, but now there was also AMC, or excuse me, the Cinemark, CNK. I got 10 of the September 20 calls at 25 cents. So here's them on the 100-day. You can see them over the years. I mean, they were trading fairly decent up until COVID, so they've definitely got beaten down. But now, this is why I like this news a lot. It may take time, so that's why I'm glad I have the AMC shares. Again, you don't really know who's going to be the winner, but there's some upside to it. It's risky, but you saw how this was during the day when the news came out. It popped it. It's holding up.
Hi, ladies and gentlemen.
September 20 calls at 25 cents.
Today will be a quick recap or look forward, and I'll just be looking at Facebook, trying to finish this in 15 minutes or less because I gotta go. We were not able to stream at Toby's house, so using my Mac. Hopefully you guys can hear me well.
If there really is a lot of influence and the market takes the stimulus stuff well, I may want to play really, really big tomorrow. Not really, really big, but don't let that get to your head. Just because I'm confident, don't be confident. Again, that could change very, very quickly in the morning if there is not any juice or gas, baby.
So what's the big news this week, everyone? Of course, the big news is the stimulus executive order. That's it. That's it. That's it.
With the stimulus news, so they might benefit. And then finally, McDonald's. I really, really like this one just because here's their one-year chart. They're kind of trailing compared to some of the other ones. But you guys have seen Walmart is well above. And then Home Depot, I kind of compare. They're all three different companies, but I kind of compare them.
All right, everything's working.
They move very, very similar. So McDonald's is the lagger again. They could probably benefit off of some of the stimulus. I think remember.
All right, so if I have a debit spread of Facebook, August expiring for August 14, which is a weekly. Okay, expiring August 14. And it cost me $241.
Everything else, I like Uber for the long term. Again, I want to look at that. Remember, we
cost me $241 to open the position. We want that $9 profit. So how are we going to get that $9 profit, right? And so here it is on Tastyworks.
There's a lot going on, but this is also their earnings continuation.
It says 99.5% probability of profit. So there's the explanation. The question is, would I even be able to sell this spread? So
affect Microsoft, but watch them. Don't forget about them. Talked about all these three, even in that name of not forgetting Amazon. This is the final one I want to look at because
you can see the maximum profit would be 10.
Microsoft in a weird way, but don't forget they have their earnings. If they do go crazy, if they do go off the stimulus, there might be an opportunity to flip some cheap contracts. So we'll see. But watch them. TLT, we need to wait for the dollar tantrum, and pretty much that stimulus is not going to stop the dollar's weakening, so watch that. But then now even watch gold. You guys could remind me about this one.
Sorry guys, you can't see the pointer, but I'm looking at that. See that? Look at that max profit versus max loss. So let's see. It's a 215 call by.
That is your watch list, ladies and gentlemen. Make sure you have your healthy ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need that.
And then a 217 call. 217 sell.
This is that moment.
Small good decisions.
The year, the election. Don't forget the bigger picture. Don't blow it. You can't blow up an account if you don't put all of the account into trades, baby. So slow it down. Paper trade, and don't be forced to trade if you're new. Don't forget about the long term. Slow and steady, baby. It's coming right around the corner. I hope you're ready. But the Colt loves you. I love you. I'm gonna see you in the morning. Let's go.
All right. So
they're like, "Oh, Mike, I just joined. I can't wait." I go, "What?" So if you guys are serious about getting a professional education, you guys are ready to join the team. Take advantage of the coupon. TTG820, get a 37% discount, and sign up before midnight Pacific time tonight. Get a one-on-one included in your membership. Now, let's just go over real quick, guys, because I know it's getting late, but I still wanted to talk real quick, briefly, about the overall markets. Jason, where are we at with the futures right now? So nobody really cares. Nobody cares about the stimulus or the lack thereof. Nobody cares about the executive order. Nobody cares about anything. The market just continues to do what it's doing, guys. Yeah, but this week is an important week for everybody trading stocks.
So as you guys could see, apparently no one cares about the stimulus, but I mean, let's look at the futures, right? Let's look at the futures. By bar chart, of course. By bar chart, because that's what we like. Alright, so the mini is what was that? Oh, 0.1%. No change really. NASDAQ is down 0.1. Yeah, these are all 0.1% changes, so nothing. Looks like it's gonna be a kangaroo week, guys, from Sunday futures. Looking like a boring week. We will see. We will see. Which is what we want. We want a boring week. Alright. So now... Oh, I'm clapped. Oh, I'm clapped. Seems like I'm clapped, but we will continue. I think. Wow. Okay. Anyway, so what was I saying? 217.5 call. Right. Or sorry, sold. This is a sell. This is a sell. So this 217.5 call, which is still a call, it would have been a sell. So I have, let's say on August 14, for some reason Facebook did indeed drop 10% on the week. It would be at around 240, 230. I would still be in the money. I would still be getting my $9. Right? Okay. Sorry, you guys can't see that, but basically I'm saying at August 14, let's say Facebook stock's 240. I honestly think it's gonna be like 250-ish. I think this will be a red week, but not too much. But I digress. It has done the earnings move. It has done everything. I think it's gonna go more up than it is gonna go down. So, anyways, so let's say it goes to 240. And then what? Okay, so as an expiration, I had wasted $241 to open the position. I'm currently down negative 241. Okay. Now I can exercise the options on expiry. So then it would be 215. I would have 100 shares of Facebook at 215 bought, which means I would have $21,500 of Facebook stock, and then I would need to the sell means I would have to sell 100 stocks at 217.5. So then I sell the guy who owns this. who owns this contract. Would it expire worthless? No, it would be in the money, so he would buy it there. And so then if I sell at 217, I made 250, right? But it cost 241 to open it. So my profit is $9. There it is. That's how it works. All right. Ladies and gentlemen, that's it. Have a good weekend.